All right, good morning, everybody. It's Tuesday, June 7th, 2022. Let's go ahead and get started. I want to jump back and take a look at what happened yesterday, just to quickly review, and then we'll get into this morning's level. Um, First call, if you guys remember yesterday, was as we pulled back into the orange power level. I told you that really the whole area here between 4140 and 4142 to 43 was going to be that first area of expected support as we were selling off yesterday. And remember, as we were coming into the open, I told you we had a nice clear bearish divergence. So we did expect the market to sell off and come into these levels. And again, this was our first support area. And I mentioned that if you wanted to play it safe, to put your order down off the orange power level at the bottom end of that range. Sure enough, market came down one tick through the level and got a nice 15-point bounce up. There was a really nice prediction point sitting right there as well, so a great opportunity to take your first few contracts off for 15 points. Of course, the market came right back, and as we started to fail and sell off, it looked like we were doing another one of those peak above and fails, or at least a test of the overnight high and failure. And so we tried some shorts as things started to break lower, and sure enough, it was just to peak below and bounce. So it came down. They had to retest that orange power level and go ahead and rip it higher. So the two shorts didn't work out. Of course, they did work out for a scalp, but not for a nice 10, 20 point trade. So things went ahead and pushed higher. We pulled back, and I told you that the ideal spot to take long was going to be 41.57.50. I put an order in at 41.57.50. The market touched 41.57.50 and bounced out and did not fill me. So it must have been a little quick little peek into that level, and then it went ahead and bounced up. So I did not get filled on there, but then on the second test of that level, went ahead and added a position on and did get a little bit of a push higher, but never got to my ultimate target. So did not make any money there either, even though I did go about 7 points in profit. And then as we kept coming up and testing into 41.65, which I basically laid out yesterday where that level came from, but we kept coming into 65 and just could not break it, and then we peeked through it and pulled back. And I told you guys we had all the hallmarks of a peak above and fail. So it came up, tried to get through the overnight or the morning high, could not do it. In fact, this first peak above was basically the same pattern. So we came up, peaked through 65, pulled back, tried to get through 65 for a very long time. And then as we peeked through here, I told you that this looked like we were probably going to be going back lower. It was a very, like I said, all the hallmarks of a peak above and fail from the first test up here and then the second test. We got all the same clues. And then there you have it. We came right back up, tested the level to the tick, and then started failing. We broke through the two faster moving averages and went ahead and started breaking below our fast moving average right there. So that was my clue, especially once we broke down through this major swing high from the open of the session. Once it broke through there, it should have been pretty clear to you guys. I wasn't here. We stopped trading at 8 a.m. So right around here when we were expecting the pullback, we came up one more time. And if you were trading after the 8 a.m. hour, 8 a.m. Pacific, you should have noticed we broke down through our fast moving average. We broke through that major swing high from the morning, and then it should have been a pretty clear picture as to what you wanted to do. Getting short right back to our orange power level, and if that couldn't hold, short down into our first pocket here, 41, or our second pocket after we got through that area, 41.31 to 34. And from there you can see a lot of trouble here trying to break through 31 to 34, and then they came up and failed right at 50% of yesterday and then continued going. We talked about the level 41.21.75 or 41.21 quarter. Let me just see what it is. 41.21.50, and sure enough, market came down, bounced right off of it to the tick, and then held the fast moving average to come lower, and then it became a nice resistance point, that 21.50 level. Pretty relevant if you ask me. So we held it, couldn't bounce and hold above, and then we held below it, got a little messy, and then they got back up above. And they used this level over and over again. You could have scalped so many trades off of that 91.50. And then let's zoom out and take a look. It looks like it kind of went just sideways there at the end of the day. So that was yesterday. We did come down and hold 41.0850 once again. If you zoom back to the day before, that's where we were playing around, if I recall. Yeah, so I guess we ducked on through it and then kind of huddled around and broke back up above. So yesterday we came down, and sure enough, the low of the day was basically 41.08 again. So we came down, held, got a double bottom, and attempt to break out again. Just point out again that 2150 level, came right into it, failed, came into it and failed multiple times here. Then we got up above it, and it was just messy and sideways at that end of the day. So coming into Globex and coming into the morning here, let's take a look at what happened. We couldn't hold above that 2150 area. We broke down lower and broke below our fast and slow moving average, and so we're pushing to lower lows as we come into the open right now. So that's where we're at. We're down right to 40.80. So once we got through 41.08, it was a nice hold. And notice we held 41.08 yesterday. We bounced out, and then as we broke down below 41.08, it became our area of resistance, and we sold off. And where we come down to 40.80, that next minor eye level, got a bounce, and now as you can see, it looks like we're probably going to go ahead and break on through, unless this is just a little fake out for that continuation to come back up. So let's go ahead and dial up to our higher time frames and start getting ready for the open here. So I'm going to go to the daily chart, and we're going to take a look at yesterday's daily candle here. I mean, that looks to me like a major rejection right from that 41.65 level that we emphasized towards the end of our trading session yesterday. So a failure right from 65, and huge wick to the upside, looks really, really weak. And then the lows of last week, I went ahead and put a white dotted line across. That's kind of the line in the sand here this morning. And if I can zoom back out, you'll see that we're just coming up to it in a few more points here. Another 8 points, and we'll be down to this dotted white line, which is the low of last week. Once that breaks, let me go back up to the 60-minute here. We'll be looking at those deeper retracement levels that we talked about yesterday. So basically everything that we laid out in yesterday's pre-market is still valid this morning, because once again, we have not broken out of the previous weekly range, which was a fairly tight, congested, balanced area of the chart there. So everything below us, everything below the previous weekly low and everything above the previous weekly high is all the same. Nothing has changed. So again, it looks like we're going to be pushing down to that 40.7150, and if that breaks, we've got the 38 retrace, the 50, and the 61 of the whole push up here that we talked about yesterday. So I don't really need to list what those numbers are. And then if for whatever reason, if the market does bounce at some point, whether it bounced from 71 or it gets some deeper pullback and eventually bounces out to come up and get through the previous weekly high up there at right around our 4200 major eye level, then we've got the other major retracements to the upside here, right around 42, whatever it is, 19, 42, 43, 16, something like that. Those are the next two major retracements we'll be butting heads against. And I think that's really all I have to say from the zoomed out perspective. So let's go down into, let me see if the 4-hour has anything to really mention. Again, we've been bouncing back and forth between these two major levels here, 40.80 and 4200 here for quite a while. So once we can get through that previous weekly low, the next major structure zone is down around 4,000. Remember, 4,004 was that level, and it's right at the 50% retrace. And then once that breaks, we're right down into the next major level right around 39.45. You guys should remember we had that 39.45 with 39.50 and 39.40, that little pocket there. So those are the two big levels that we have here from a 4-hour perspective. And now let's look at every single level that we're going to want to be aware of coming into the open on our 60-minute chart. So right now we're sitting at 40.80. Probably said that 5 or 6 times now. So we're sitting right there. We do have what looks to be, and let me go back to the 4-hour here. We technically have a little bit of a 4-hour and hourly bullish signal from where we are right now. I don't know if I want to put too much faith in that given just the overall context right now. But if we don't break from the lows that we're making here, and maybe if we don't break 40.7150, the low of last week, then we're going to expect there to be some type of bounce. Now, the thing is, how far is the market going to push? In the current conditions, we get a lot of attempts by the bulls to break out, and then we get the failure. So even if this does hold here with a 60-minute and a 4-hour potential bullish signal, who knows how far that's actually going to get, right? So I'm just making the argument now that with the hourly and with the 4-hour showing a little potential bullish signal, we could expect to see a bounce out of the lows that we're making right now. If that doesn't happen and we break through the low of last week at 40.7150, then it's that whole case that I just made is completely negated, and we're going to have to look at being short down into some of these levels. So again, the major retracement levels are down here, and then if those in between those levels, we've got all the other levels I mentioned yesterday. I probably don't have to sit here and list every single one because it's just getting old at this point. I will bring this over as well, this little shaded area. Let me bring this out to the 8th. So 39.79 up to 39.83. That was that little pocket of pretty strong resistance going back 2 or 3 weeks ago there. It's something that we've been watching for about 2 or 3 weeks now. Ever since we broke out above that area, so back on May 26th, we've been paying attention to that area there. So be aware that we've got that pocket before we get down into the 61.8 retracement. And then there's that 39.45 with the 39.50 and 39.40 surrounding it that I mentioned a few minutes ago. And again, it's just, I'm not going to sit here and list every single thing, but I do also want to bring this out to the 8th. This is that little pocket at 38.50 to 38.52. Right? And then if the market really sells off and breaks through the low of, basically the low of last month, then all the levels down below there are the levels that we've talked about for a very long time. So I'm not going to mention them. You should already know what they are. And if you don't, we've got plenty of previous pre-markets you can go back to where we talk about them. Same thing on the other side here. If they break out above 4,200, our major eye level, and the high of last week, then all those levels above, we've spent so many times going over that I'm not going to waste time going through that. So that's what we see for this morning. I don't think that there's really much else to add to the picture. Ideally, we want to get outside of the previous weekly range here, 71 to 4,200. It's just been a total mess. Despite it being a mess, still levels are working. Our setups are still working, but I'd like to see us get out of here. So hopefully this morning, the potential bullish case that we get off 80 here or off 71.50, hopefully that doesn't happen and we get some type of sell-off, because I'd rather not come back up and play inside of what's been happening here. So that's all I got for you this morning. A little bit shorter because we don't have to spend a lot of time reiterating all the same stuff. And I think that's it. So have a great day to all those out watching on YouTube, and we will be back tomorrow.